Morning, grade 11. So I'm quickly going to explain to you the second and third part of 522. So please try and follow and keep up. Right, so what happened here was we had disposal of two assets, vehicles as well as land and buildings. So I've separated them and I'm going to do them separately because that's how you should be doing it. You must work systematically and take each thing on its own and try and calculate it like that. Right, so the vehicles, I drew my timeline, starts in March, ends in February. We had vehicles at the beginning of the year of 850,000, accumulated depreciation of 210. On the 1st of February, we disposed of an asset, and the cost price of that asset was 126,000, and the accumulated depreciation of that asset was 70,000. Right, but then on the same day, it was a trade-in, so it means we gave them the old vehicle, and then we got a new vehicle with 150,000. So immediately, just by looking at my timeline, I can see that there are three different assets on this vehicle timeline: the old, the disposed, and the new. Right, so let's quickly look at the transactions for the disposed asset. So step one. Step one is to transfer the cost price to the asset disposal account. Okay, that would mean I would debit asset disposal and credit vehicles. 126, 126. On the equation, vehicles would decrease and asset disposal will have a debit entry, which would be minus. Right, step two is to update the depreciation. Now for that, I first have to do the calculation. Right, and this is how I do the calculation. So I've got my three assets. Here you can see them: disposed, old, and new. So the disposed asset is 126,000. It's 20%, it's cost method. It's for 11 months. So that gave me 23,100. The old assets is the 850, but I take the disposed asset out because it is included there in the opening value. Then I'm left with 724,000 times 20% for the whole year gives me 144,800. And the new asset I bought is worth 150 times 20%, and I only had that for 1 month. So that's 2,500. So in step two, when I have to update the depreciation, I will then add them all together. So I've added all three, this depreciations together, the old, the new, and the disposed. I debit depreciation and I credit accumulated depreciation. Right, depreciation is an owner's equity expense and accumulated depreciation is a negative asset, so minus. Right, then step three is to transfer the accumulated depreciation to the asset disposal account. So now it's everything that relates to the disposed asset. Right, so if I look at that, I know the disposed asset had accumulated depreciation of 70,000, and then I just calculated that it also had a depreciation for the year of 23,100. So that gives me 93,100. Right, so I'm going to debit accumulated depreciation and credit asset disposal. So accumulated depreciation, I'm going to add now, and asset disposal will be written on the credit side, which is a plus, because owner's equity on the credit side is plus. Step four, record the selling price. Now it was a trade-in, which meant that it is affecting my creditors. So because I'm going to use creditors, it means that the old vehicle the value of the old vehicle will be subtracted from what I owe them. So that means that creditors will be debited with 30,000 and I'm going to credit the asset disposal account with 30,000. So credit asset disposal is plus as a income, and then creditors liability will go down. Right, and then step five is to record the profit and loss. To do that, I simply had to do my T account. Here's the T account. So you had to do this in any way. So here you could see what I've done. This is for vehicles. Cost price is carried over. Accumulated depreciation. Record the selling price. And then when I balance it, I will see I'm making a loss on this disposal. And this loss will be recorded as Loss on disposal is an expense and asset disposal will be credited. So they both owner's equity, so it's plus minus. Right, then to look at the disposal of the land and buildings, there is no step 2 and 3 because we don't work with accumulated depreciation or depreciation. So step 1 is to transfer the cost price. So we debit asset disposal, 110,000. We credit land and buildings, 110,000. Minus assets, minus owner's equity. Then step 4 is we are selling this asset on credit, which is debtors. So we debit debtors 200,000 and we would credit asset disposal 200,000. And it's plus assets plus owner's equity. And then again, we could see from the asset disposal account that we've actually made a profit on this disposal. And there I've just done it underneath. There's land and buildings. I'm selling it on credit, 200,000. So we're making a profit of 90,000 on the disposal of land and buildings. So here we go. Now we're going to debit asset disposal and credit the profit. Again, they are both owner's equity plus minus. Right. Then we have to do the post-adjustment trial balance. So let's quickly look at what that would look like now. Please, you have to use your journal entries to see what you are doing and which accounts are affected. So land and buildings, we started with 1.5 million. We are selling 110,000 rands worth of buildings. That gives me 1390. Vehicles, we had 850. We sold 126 and we bought a vehicle worth 150,000. That gives me 874000. Then accumulated depreciation, we started with 210,000. This is step 2 where we updated the depreciation, and that is step 3 where we took out what belonged to the disposed asset and we minus that amount, and that gives me 287,300. Debtors was 72,000. We must add the debtors for the purchase of the land and buildings, 200,000, 272,000. Creditors, we had 85,000. We buying the new vehicle is worth 150,000, but we can subtract the 30,000 because that's what they're giving us for the old vehicle. So they're exchanging us the vehicle for the cash. So we don't have to pay that 30,000. They already took the vehicle. And then it leaves us with 205,000. In the nominal section, our depreciation, this is the depreciation on the old, the disposed, the old, and the new. So I just grouped them together, but that's how we work them out. So they come to 170,400. And then for the profit and loss, we made a profit of 90,000 on the buildings and a loss of 2,900 on the vehicles. So the math of that is that we still make a profit of 87,100. Right, grade 11s, this is quite complicated. You are going to get an adjustment like this in an exam. The disposal is just going to be as one of the other adjustments that you've done already. So you need to know how to record it, especially in the post-adjustment trial balance and what it is going to affect. So I would want you to please just revise this 5.22. I'm not going to give you more work. Please look at what you've done, mark what you've done, and if you had a lot of errors, I would like you to look at the video over and over again until you understand what I've done, and then try to redo it until you get the correct answer so that you know where all of these amounts come from. And then you would feel more confident when you get an adjustment like this. Obviously, you won't get a big one. This is now a whole exercise on it. You'll just get one small one, but still it is important to know how to record it. So then once you've done that, then we will carry on with the capitalized interest, and that's not new. You've done that already. And then we're just going to put all these adjustments together. Right, please remember you can ask me questions via WhatsApp if you get stuck with anything, and I will explain to you, or if you're not sure where values come from, then I'll explain to you how to do it and help you in that regard. Have a good day. We'll speak again tomorrow.